Rich, thanks for joining us at Forbes today.
It's a pleasure.
We're happy to have you. And you know, at Boston Consulting Group, you guys are talking to a lot of companies all over the world, and one of the things I'm sure comes up all the time is how can we leverage emerging markets and how can we get into faster growth environments? So I think the first question I would ask you is, how can companies do that? Is it always a build versus buy discussion? What are the things they have to look at before they consider how, when, and where to get into emerging markets?
So the first consideration around this is actually having a robust strategy about which emerging markets and on what thesis, because it's not enough just to go for the revenue. It's got to be differentiated. You have to have sources of value creation, ways that you can really deliver shareholder returns. And so the big question for most companies, recognizing that emerging markets are often more of a longer term play than a shorter term play, is where can they win? And which are the markets, and what are the positionings within those markets? Which segments, which opportunities? So a lot of the questions and the issues that we get involved with are first getting the strategy right, figuring out which markets to play in, how to win in those, and then second, then how to actually really make it happen. Because it's so much more than just having something on paper, right? It's figuring out which investments to make, what capabilities to build, how to get the business model right, and how to build the talent that's required.
And it goes way beyond theory. It's execution too, right?
Oh,
that's
it's
the biggest part of it.
And in these markets in particular, it's around execution, because oftentimes companies are up against local challengers who are very strong, have strong share positions. Oftentimes they're dealing with environments where the talent pool isn't as strong. So a lot of it's how do you attract the right people, develop and invest in them. Right. And then I would say for many of them, there is an investment element, and particularly even now, maybe as the equity markets have cooled, an opportunity to do external investments. But for many leading companies around the world, a lot of it's what they're doing on the ground to build their own capabilities.
Right, we're hearing a lot of talk these days about how emerging markets are not emerging as fast as they were 18 months or 2 years ago, or even beyond that. But the fact remains, if they're not going as fast, perhaps prices are a little cheaper when you look to buy things.
Yes, and again, you have to take a longer term view. Just a quick aside, I was working in biopharma in the late 90s, which was the last time the biotech market really dropped. Right. And I was talking to the head of research for one of the traditional pharma companies. And his mindset was, well, this just shows we were right. And big pharma had the right mindset. It was exactly the wrong mindset. Right. The mindset should have been, how do I use this opportunity to find assets that I may not have been able to justify or afford, and get in there? And I do think we'll see some of the deals in that context right now.
When you go and meet with companies, CEOs and executives who are looking to get into some of these markets, what are the mistakes you find that they're making, that they've made in the past? You know, what are the biggest things that companies do wrong when they're looking at emerging markets?
Let me just cite three. The first is the wrong level of ambition. Many of the leading MNCs have been living now for over a decade in markets with slow, in some cases, no growth. And they get caught in a mindset where you're looking for incremental plans that make the most of a limited growth environment. Right. In the emerging markets, even in today's world, one has to have a different mindset. These are markets that are going to grow in major ways over the coming decades, with bumps along the way, more volatility, more uncertainty, but a lot of growth. And that requires the right level of ambition, particularly going up against the challengers in those local markets that often have enormous ambition. The second is getting the business model right. One doesn't win in emerging markets by taking the traditional markets approaches one used in Europe or the US and just bringing them. It's about building both the business model that recognizes the unique environment and the product portfolio. And so winning companies are now putting much more R&D on the ground, much more capabilities locally, and recognizing the unique requirements. So just for example, in China, 90% of the urban population is living outside the major cities we read about. Right. It's living in other cities. So how do you get a distribution environment that actually works and reaches customers in those markets? And then the third point I just make is around leadership and talent. It's a huge deal, and we watch major investments that companies need to do to build the capabilities. And it's twofold. The first is taking the best talent in the developed markets and getting them exposure to the emerging markets. Right. The second is what one does to build local talent. Samsung in Africa has a program underway to train 10,000 engineers locally in Africa in order to be able to build its business. I mean, it's a different mindset than often is taken in the West or in developed markets, where you can recruit a talent base that's very strong on day one.
I think a lot of companies historically, and a lot of investors historically looking at companies, have thought we have to be in the BRICS. Ever since that term was coined by Goldman Sachs, they would say, oh, I want to be in Brazil, Russia, India, China. The fact is there are emerging markets around this world that are doing much better than those, and over the long term may have faster growth than those economies, which are huge. Don't get me wrong. I'm curious what reception you guys get when you go into companies and you talk to them about, hey, it's not just the bricks anymore, it's well beyond that. Have companies come around to that, and where in the world are they looking to expand now, and what are the hot markets or the ones that are really coming up strong?
So I would say, first of all, most of the leading global MNCs now fully understand that the emerging markets go way beyond the bricks, right. And we see that. The ones I'd highlight is our Southeast Asia has enormous underlying potential, and we're reading about it right now because of the challenges in Indonesia and the currency issues.
Sure.
But in the medium and longer term, strong free trade agreement, good economies, well run, and a lot of potential to build there. I'd highlight Latin America outside of Brazil, particularly if you look at Chile and Peru and Colombia and Mexico. These are 4 really strong economies, very, very good investment environments, very good opportunities to build and grow. Mexico obviously also has the advantages of the links to the U.S. with the free trade agreement. Sure. And then with a longer term hat, but nonetheless, Africa, I do think is a place where companies are recognizing the underlying potential, and they're seeing more political stability, less corruption, neither where we would aspire them to be longer term, but on the right trajectory, and as a result seeing more potential for the longer term growth.
And massive infrastructure needs, of course.
Huge infrastructure needs. We just did some work with the World Economic Forum. Africa right now is spending $45 billion a year on infrastructure broadly defined, transport, water, telecom, and the like. And it needs to be spending over $90 billion a year, which is both a challenge because a key to unlocking the growth is getting that infrastructure in place. Right. But of course it's an opportunity as well. And particularly governments will never be able to raise that level of spend. So it's got to be through public-private partnerships, creative ways of getting deals done to put that infrastructure in place. But that opens up a lot of possibilities for investment.
Right. Rich, thank you very much for joining us today. I appreciate you coming by Forbes.
It's a pleasure to be here. Thanks.